11 subscribers. 5 months without an upload, I'm back again. Um, it's been a pretty interesting couple of months. So I never said this, but I'm a medical student from Ghana, but I live in Algeria. So I went home for the first time in 5 years, and that's why I haven't been uploading much. I've still been trading, and I have quite some interesting development to share in that department. First thing is I took the FTMO challenge. So when I got home, I had like a $200 trading account, and it was going pretty well. So trading supply and demand, and then I decided it was best to actually take the 10K FTMO challenge. You see, the plan was always to grow my $200 account and then use that to fund the 100K FTMO account, right? But that didn't seem like a very good idea after much considerations. If you're trying to do the 100K challenge and you don't have enough capital and you still haven't tested how it's like to take trades, get funded, take profit splits, I think it's best to start as small as possible. So I did the challenge, I didn't pass, but I didn't fail. FTMO has unlimited free repeats as long as you end the challenge in profit. Even if it's 1 cent of profit, you get to repeat for free. So it was going quite well, and then it wasn't. My strategy actually started really testing my patience, and yeah, things just weren't working out exactly as I thought I expected it to. I made a couple of mistakes along the way, a few FOMO trades, sometimes getting scared to execute the trades that actually did play out, and one actual critical mistake I made, reducing the risk to 0.25%. In that very moment, it wasn't a good idea for my psychology, because reducing the risk from 0.5% to 0.25% actually tricked my brain into, taking a streak of losing trades I shouldn't have gotten involved in the first place. So now I've realized it's best to stay between risk that is actually going to make you want to take the high probability setups, and also not too much to keep you in the game in case you lose, right? So my new plan for taking profit from challenges is 0.5% and then 1% when I go in profit. I think that works best for my psychology. So like I said, I didn't pass the challenge, but I had the free repeat. It was actually a miracle, if I'm being honest, because stacking a string of losses, and then one day I think it was 2 days before the challenge is over, I just place a random sell trade on the NASDAQ, and somehow that just goes in profit and I cover all the losses. And I think I was in about 4% drawdown, which wasn't anything crazy for 30 days of trading. And fairly my risk management was okay, and that was the only thing that saves me. So yeah, I had a second chance. So when you get the second chance, they give you the login credentials, but I didn't start the challenge right away, and this is why. A couple of months ago, when I was still trying to find myself in the market, and I was still lost and had no idea what I was doing, trying to make the transition from trading with moving averages to price action, I stumbled upon ICT. Yeah, that's the spoiler. I am learning ICT concepts. So that's the spoiler. I've been learning ICT concepts, and I started somewhere in March. It wasn't going too well, so I found Doyle Exchange. Shout out to Doyle. He really helped me in the early stages. That's when I developed the 5-minute scalping strategy, and it gave me a fair idea about how smart money works, and what liquidity grabs are, and imbalances, and supply and demand. But then I started learning ICT, and it was way too overwhelming. You go on this channel right now, there's tons of videos, all of them have some value to give, and some of them are incredibly long, so I just didn't know what to do with them. But something amazing happened while I was doing the 10K challenge, which actually caused me to want to learn ICT, and it's incredible. I don't know how else to describe it. It's just incredible. Once you see the market that way, it's hard to turn back. So where am I right now? Okay, so right now I'm still learning the ICT mentorship. I think I've reached episode 21. I had an idea of how to build my model, so I test that a lot more than just watch all the videos. And I realized I'm pretty lazy and my trading is a bit slowed down if I'm not on a live account. So I try to make a deposit into $100 accounts to trade with, so I get excited every day, to come to the market and all of that. And I thought about it and realized it's just not worth it. In the future, I want to get prop firm, I want to get prop firm money to trade with. I want to get funded. So I know of FTMO, I know of My Forex Funds. My Forex Funds has a 5K account, but it costs $50. Maybe it's best to do the 5K challenge. Even if I fail, I get the experience, I build the momentum for trading. So I'm doing the 5K challenge. I started yesterday, 0.5% drawdown, took a loss. Saw two other trades play out. I took one on demo. Maybe I'll show that on the screen as well. And I didn't take it on the main accounts because there's still so many things I'm trying to test out, but I don't want to slow down. I want to keep the momentum and the excitement I have for trading going. Wake up every day, get on the charts, study ICT, back test, forward test, do this challenge and see how it goes. It's $50. I can afford to lose $50. Best case scenario, I don't, because I believe I can still pass this challenge, right? And once I pass challenge and verification, I move on to the 10K challenge and then advance in trading. So I'm enjoying trading with ICT concepts. I'll share a bit of yesterday's trade and an amazing forward testing trade I took on demo. Okay, so I'm gonna show yesterday's trading and where I took the loss was right here. Put this in replay mode and explain a bit of my thought process. I normally start my analysis on the daily time frame. So I had a buy bias for this day. However, the mistake I made is I don't think I quite understood the logic of this model yet to that point, that the fact that we're going to have a buy trade in New York session, which is at 8:30. My time is set to New York time, by the way. So the fact that we're going to get a buy trade for the day in the New York session doesn't mean we necessarily have to have a bearish move in the London session. Okay, however, I was expecting this bearish move. This was yesterday's trading. This is Asian open, the midnight open, New York time opens here. So this is Asian session. We get in the London session right here on this candle. And I was expecting price to trade down to this line. This is the 50 fib level of this move right here, from this swing low to the swing high. The swing high right here. Okay, but that didn't happen, and market took liquidity from the low of the day into this fair value gap. And then after that, a short while, it started rallying upwards. So the reason I took the sell trade here, and I'll go into the 2-minute time frame to show exactly where I took the trade, is because when we started to go up, my thought process was, okay, if we didn't get to this line, then we're probably going to get there later before the New York session. So what if I just take a sell trade there in that 2-minute fair value gap? And now we're in the 2-minute time frame right here. 2-minute fair value gap. So I got in right in there. My stop loss was above here, right there, and I had a profit target, first profit target down here. But none of that happened. There was a rejection, as you can see, and then price came a bit down into profit, and then hit my stop loss. Right, so that was a losing trade that I took yesterday. Okay, so now I want to show a trade I took yesterday on demo. This trade, this move right here. I took this trade on demo yesterday for 4R. I didn't take it on my Forex Funds account because I was trying to test an idea that I had. And, like I said, I'm still learning this model and I haven't built my model completely. Normally, I shouldn't be doing any challenge at all, but like I said, I like to start with something small and, it keeps my momentum still, well, there, so I'm able to stay serious with trading. So how did I catch this move? I'll use a replay button to show exactly how that happened. Okay, I'm not going to delete anything else. They can all stay here, right? So this is where I took the loss. Price comes up, and the beauty of ICT trading style is the incorporation of not only price but also time. So time is incredibly important. I don't trade at 9:30 because that's where the stock market opens and the market gets incredibly volatile. I like to trade after 9:30 because even though I'm looking at the 8:30 open, I like to trade after 9:30. So the best setups for me are formed um, after 10 a.m. See, New York time, by the way. This is New York time. So that's how I trade. So I knew there was buy side liquidity here. When I scroll all the way, you can see this swing high up here. There's buy side liquidity, but we had already taken out the high of the day, which was formed in the London session before the open of the New York session, 7:40, 7:45. So I didn't want to take this trade because I wasn't sure if we're going to take out this high in the buy side liquidity. However, this is what happened, right? Let me just move forward. If you look closely, you can see I've written REQLS. This is how I represent relatively equal lows. So you see how clean this level is. The market always clears out these levels, so it's something I really look out for. And also gaps in the market. So in the 5-minute time frame, we have this gap right here. So I expected that we dig down into these equal lows and then fill that gap, maybe. We don't have to fill it completely, just get in there, and then you look for a setup on the 2-minute time frame and take a buy trade. So this is what we had, right? We get in there, I get on the 2-minute time frame, then I wait for a market structure shift / displacement. A market structure shift is I want to see a market structure broken, right? This is a high, this is a swing high, this is another swing high. If we break a swing high, I know there's a market structure shift. We dig deeper into the gaps. On the 2-minute time frame, you can see the 5-minute gap get divided into 2 parts. So there's no gap even here. The only gap on the 2-minute time frame is here. It doesn't matter. We just dig deeper into the 5-minute fair value gap and fill the gap completely. Okay, so now the swing high I'm looking at is this one, right? Waiting for this one to get broken. There we go. Right here, we break that high. And so now, this is what I represented. This is the 2-minute fair value gap I'm looking at. I'm waiting for price to get into this fair value gap, fill it in just a little bit. So my order is right below the limit of the fair value gap, so I can participate in the buy trade. Price picks it up right there, gets rejected, and the rest is history. So we rally up like that, and I take a nice profit on my demo account. Right there. Yeah. Let me see if it's going to show when I enable executions. I don't think it's going to show because I'm in replay mode. Okay, so I'll show the next trade I took. So after taking out the buy side liquidity, we had another market structure shift to the downside. Right there, we have this swing low. We break the swing low with this move. We leave that small fair value gap. And I wait for price to get back in the fair value gap. It gets in there, here. So now I'm in the trade, and it sells off. So this is a 4RR trade. Both trades were like 4RR. This is 4RR, and this is also 4RR. Yeah. But like I said, I'm not very worried about missing out. So I just use this as a learning opportunity and add this to my data, to back up the idea that this model actually works, and I'm gonna get used to finding setups like this in the future. So this is how ICT, the model I learned from the ICT mentorship works.